Good afternoon, ladies and gentlemen, and welcome to this week's trade review session. As always, if you have a question to ask, please do so, and I'll do my best to get through to answering it during the course of this afternoon session. We didn't do a live session this week. The reason being is that I was planning to do it today around non-farm payroll. But unfortunately, just because of timings, it didn't work out. So we will, and non-farm payroll was reasonably uneventful if you compare it back to how we've seen movements both around the open and around non-farm payroll in the past. So the Dow at the moment trading at 30,100. I'm just going to put this onto a daily chart, and you can see that we're trading pretty much at the high or the most recent high that we've seen. I think we did touch off about 30,130 during Asian trading a couple of, maybe a week ago at this stage. The anticipation is that we struggle to go through this level. It is all clear sky above, so once we get through there, you'd imagine that there'll be a few stops that are going to trigger. There's going to be a little bit of spoofing, so in an ideal world we stop short of 30,120, 30,130. I've put a stop on some of my Dow trades above that level. And it is always a very dangerous area when you have this uncharted territory that we've not been in before. There is nothing really that you can pin stuff off, and as I mentioned already, there is an element of spoofing. Years ago when we were standing in the trading pits, if we were approaching a new high, not even a record high but a new high for the day, we would go searching for stops by buying one lots above the market and seeing if we could trigger a stop, and then either sell into the stop if it was a buy stop, or buy into it if it was a sell stop, and look for the market to recover. But triggering those stops was one of the ways that we were able to stroke manipulate the market at that particular time and benefit from it. So look for the movements around this area. As I've mentioned already, I do think that we will stall in this area around 30,100, and we will move back lower. Gold is selling off at this time as well, trading at 1934. I think we've been up to 1948 around non-farm payroll. So the impact from non-farm payroll today was probably more markedly or more noticeable in gold and in the currencies rather than in the indices, which have rallied fairly steadily throughout the course of the week. And as many analysts or observers would point out, as the numbers were being released, probably didn't have a great deal further to go or scope to move higher. And so as such, we've seen a slow movement to the upside, probably only 50 or 60 pips from where the market was when the announcements was made, whereas gold has fluctuated quite dramatically over the last period. This is a 1 minute chart, so you can see, let's just put some lines in here so you can see the extent of the movement from gold's perspective to non-farm payroll, and then on the downside you can see levels that we've been at fairly recently, just above 1832 and a half. Sorry, the line isn't moving for me. So they're about 1832 and a half, 1833. So a fairly expansive movement in gold, and not so much in the index or in the Dow at least. And as you can see here, one of the things that I've mentioned over the last number of weeks when looking at some of these data releases is to let the moves happen and then either sell or buy into the move once the move has happened. Trading around the number is a very quick 50-50, very difficult equation, whereas sometimes when you let the move happen and you can start to see the move peter out, then you have some ranges that you can pick up from there, and I think that's quite pronounced when we look at the trades that we see there today. So with the euro dollar, which has hurt me all week, there's no way of explaining that otherwise. I think if we look at a daily chart, and I have one trade left open in the euro dollar that I will close this evening, you can see the huge movement that we've seen over the course of this week. This is an hourly chart that we're looking at. Sorry, let me just widen that out a little bit. Sorry, the red line I'm just drawing in there is really where I expected to see resistance start over the course of this week, so just above 120. I think if we widen this out and look at some daily charts, you can see similar back there in August. Again, struggling to get above that 120 line, but we've moved through it very, very quickly. Continued on the upside, as you can see, with the three big candlesticks having a bit of a wobble in the ascent that the euro has been enjoying over the course of the week, and so we're back down at 121.43, 44 at this time, but quite spectacular, the rally that we've seen throughout the course of the week. So the DAX and the Dow both moving a little bit higher as the Dow passes through that 30,100 level. So we're at that level that we saw once during the Asian trading zone before 30,120, and we'll just be monitoring to see whether it does push through that level. As I mentioned already, I do have a stop in at 30,150. So with a few trades left open, I think there's 4 trades left open at the moment. It's been a very mixed week, profitable. We'll have a euro dollar to trade to close, but that will reduce the profit from yesterday. So very topsy-turvy week. A couple of stops there on Monday, and 5 or 4 stops, and one other losing trade on Tuesday. A couple of nasty stops on Wednesday, and a further one yesterday. So it's been a real mix of results. And as you can see there, the summary from the week. So the only trades that are showing any profit at all during the course of this week are the Dow trades, which I think sends a clear message to me from a gold and a euro dollar perspective. Probably to leave those alone. 80 trades in total during the course of the week, but the stops have really hit hard. You know, on the back of a losing week last week, there's another one this week. So Chris is asking, what do I expect to happen with the dollar when the stimulus deal is confirmed? It's difficult to say, Chris, to be honest with you. The stimulus deal is expected to be passed. I think a large part of it is already written into the market. So from an equity perspective, you would expect the stimulus deal, it's all going to be about the size of the deal. Various numbers have been bandied around during the course of this week. So quite what level of stimulus is going to be added to the monetary amount that's going to be added to the market is important. I think whilst there is no consensus at the moment, the opinions vary from it, just about hitting the mark or massively disappointing in terms of the value that's going to be attributed to it. And for that reason, there is some fear that the equity markets will sell off. If there is a bumper package that is put together, that will benefit the equity markets. But a lot is written in at the moment. So, I think the key when we're looking forward in terms of the stimulus deal and what eventually is going to be passed is the amount of stimulus that there will be, and how the market is going to accept that. The dollar could very well come under more pressure, more money being written into the system. Gold it has obviously been under pressure for the last 10-15 days or so, as we've fallen away from way above 1915, 1960 to where we currently are. But we have been lower, and we can see it selling off again a little bit today. So as much as I would like to run this euro dollar trade over the weekend, I'm gonna close everything down and just refresh my thinking ahead of next week. Obviously, the resistance that I was expecting in the euro as we rallied up towards that 120 level didn't occur. And really, as you can see from the trade sheets that I showed you there a few minutes ago, you know, I'm not really catching any moves or any positive moves. It's 20-30 pips, and you know, I have to question myself as to why that is. And I think there's, you know, from my own perspective, there's definitely a little lack of confidence at the moment. When I'm on a winning trade, I could run them a little bit further. Yesterday evening was a good case in point when I was short the Dow and the market fell away 200 to 250 points, but my maximum return was about 54 points. So not really benefiting from the extent of the move when the move is in the direction that I'm looking for. You know, taking profits a little bit too quickly, and then the stop losses are obviously impacting fairly hard when they are triggered. Non-farm payroll today, the numbers were mixed, to say the least. The number of jobs added was 245,000. The unemployment rate came in largely where it was expected to, at 6.7%. The average earnings numbers were a little bit better than expected, but the dollar is under a lot of pressure. The numbers weren't inspiring. The dollar index is down at a fairly low level, trading around 90 at this point, and continuing to come under pressure across the board, as you see dollar assets really weakening. You know, again, I think sterling traded above 135 for the first time in a long time today. It's actually, I don't look at sterling all day long, but you can see the big move there above the 135.40 line, probably up to 135.38 almost as a high today, before falling back with probably a bit of profit taking to around the 134.78 level. So markets going forward, I think stimulus is a big part of what we're going to see play out over the next couple of weeks. The market has rallied hard. You would expect there to be a bit of profit taking if there is some form of correction from these levels. I don't think that is necessarily going to worry the markets unduly. You know, corrections are part and parcel of what we see in the marketplace, and you know, that reappraisal does give people the opportunity to get back into the market for those who are currently missing out. I've always mentioned in the last few weeks about how the year end has performed over the last number of years, and been very positive and strong movements to the upside. Stimulus perhaps will add that momentum that is needed to see us push on from the levels that we're currently trading at. But I personally believe that pushing through the levels that we currently see just above 30,100 is going to be very tough for this market, unless some more positive piece of news comes to the fore. We've had the majority, I would imagine, of the vaccine news is already written into this market. There was a bit of a sell-off yesterday on news that there were some supply chain issues with the Pfizer vaccine, and we'll have to see how that unfurls between now and the end of the year. But with vaccines apparently being delivered both in the UK and in the US during the course of this month, there is definitely potential to the upside. There aren't any other questions coming through, so I'm going to leave this session here. If you do have anything else that you want to ask me, please do email away, and we will reconvene next week. Thank you very much for listening.